At the end of September, the office leasing market in the Paris region is down by 30% and reaches 1.3 million square meters instead of 1.8 million last year. This mainly results from a significant drop of the large turnkey transaction this year, with not less than 440,000 square meters missing. In addition to this, the lease renegotiations took a large scale in the market this year. Companies seeking only cost-cutting preferred to renegotiate their lease rather than move. The evolution of the leasing activity is rather inconstant according to the geographies, but we can keep in mind that the Paris La Défense and Paris CBD show a better performance than the average. The immediate supply is rising this quarter with a vacancy rate reaching 7.2%. We still see a double-speed market. Paris is undersupplied with vacancy rates generally below 5%, while the supply is abundant in the periphery and especially in the Western Crescent. Headline prime rents are under pressure. In the Paris CBD, it has dropped to 705 euros per square meter, with very few deals achieving a rent above 700 euros since the beginning of the year. Same picture in La Défense, where the headline prime rent is now at 510 euros. In addition, commercial incentives remain high and real rents are now bottoming out. Given the delay in the leasing activity since the beginning of the year, we forecast a total take-up around 1.8 million square meters at year-end. In the coming months, we can anticipate rises in the supply in some markets where new buildings are due to be completed. The positive economic signs in Europe and France lead us to foresee a recovery from mid-2014. Where is the investment market at the end of September? With nearly 8 billion euros invested in the Paris region, the market is 8% ahead of last year. The key element to be retained at the end of September is the equilibrium of the market in terms of individual deal size, risk profile, and geography. On the last point, we can also highlight the comeback of La Défense in the game, with 2 large sales this year. To date, the investment remains dominated by the French players. They are very active on their traditional market segment and have taken the leadership on the large deals market, traditionally being a more international playground. Among the 3 biggest deals of the year, each above 300 million euros, 2 of them were acquired by French investors. However, this doesn't mean that international investors have deserted the Paris market. Some large deals are currently under negotiation, and the market profile should be more international at year-end. In conclusion, 2013 is a good year, which works well on all market segments in terms of size or risk profile. The yields, unchanged again this quarter, should remain stable, investors showing a continuous interest to prime products. At year-end, we should reach 10 to 12 billion euros, comparable to the last 2 years' level.